Good evening, guys. Welcome to today's section. So, today's section we'll be talking about market trends, how I look at market trends, and how market trends is supposed to be looked at. There are ways for you to look at the market trends and then know if you should be trading the pro trend or you should be trading the counter trend. Because now when it comes to trading, right, we always want to first of all look at the market trends before we know the direction that we will be trading. Because as smart money traders, we always want to trade in line with the smart money rather than against the smart money. So identifying or trying to look at the trends allows us to have a bigger view. You understand, guys? To have a bigger view or to see the bigger picture of where the market is currently trending. If we should ride with a trend, or maybe we should wait for a pullback before we ride with the trend. Now I'll be showing you guys as well the time frame that I basically look at market trend, and the time frame that I avoid trying to identify market trend. So without wasting too much time, I'll be presenting my screen. So while I present my screen, I would like every one of you to pay good attention to what I have to present and how I have to explain about my presentation, guys. All right. Can you guys see what I have on my screen right here? Can you guys see my screen? All right, very good. So let's proceed. All right, let's proceed. So now when it comes to market trends, we have three types of market trends. I know some of you are not beginners. You already know about trends, right? But there are ways that I look at the trend so that I can know the direction I'll be trading. You understand? Now, one thing you need to understand about market trends is this. We have the uptrends. We have the uptrends. We have the downtrends. And then we have consolidation. For the uptrend, or let me start with the market trend itself. A trend is a tendency for prices to move in a particular direction over a period of time. Trends can be long-term, short-term, upward or downward, and even sideways. So now success with forex market investment is tied to the investor's ability to identify trends and position themselves for profitable entry and exit points. So now, when you look at the example of a market trends, you need to understand that both uptrends and downtrends are made up of two key components, right? Both the uptrend and the downtrends are made up of two key components. One, the impulse and the corrections. So now we can view the impulse and a correction as a swing structure and a substructure, or you call it an internal structure. The overall direction of the larger trend is the swing structure, and the pullback move happening within each correction is a smaller trend itself, named the substructure, or you call it the internal structure. All right. So now let's dive on the screen. Let me show you guys my chart right now. So this was a gold trade I took. I was expecting it to sell immediately, smash TP. That was the major reason why I sent in that sell in the group. But the buy still continues. So let's talk about market trends. So now the first thing is the example of an uptrend. For us to identify an uptrend, we need to see first an impulse, right? So price creates a low and then impulses to the upside, creating a high. How do you know that the market just created a high? The reason why you know that market creates a high is when, or the particular area where the pullback starts from. The particular area where that pullback starts from is when you know that the market is about to pull back. So in this case, we have some kind of market trend right here, which is an example of an uptrend. So in this case, you guys will see that from this low, right, we had that impulsive move that then created this high, right? After the high was created, then we started to see some move to the downside. This kind of move to the downside, this low right here is going to be the swing low, and then this high right here is going to be the swing high. So in this case, we don't know if the market is going to continue to the downside or is going to continue to the upside. So for the fact that price is still moving within this trend, it simply means that we consider this leg inside of this high and this low as the substructure, or you call it the internal structure. And then if you get another impulsive move to the upside, that simply means that the market is uptrending, and every push to the downside is known as the correction. The correction for price to continue bullish. Now, there are two ways you can trade this. There are two ways you can trade the substructure or the swing structure. Now, for my own kind of trader, right, I am a pro trader. A pro trader simply means a trader, right? A pro trader simply means a trader that trades only in line with the market trends and not against the market trend. Why by a counter trend trader, when we say you are a counter trend trader, it simply means you trade against the current market trend. If the market is in an uptrend, you wait for the pullbacks and then you enter the trade. Whereby a pro trader waits for the market to pull back. When it is done with the pullback, then they can look for longs or look for shorts against the pullback in line with the current market trend. So now let's talk about this example. You can see the schematic you can see here. Now this schematic simply means a downtrending market. Then we have the internal or the substructure within it. What we see here is this. You need to understand that this is the overall high because this is where the downtrend started. And then we have this impulsive move to the downside. After this impulsive move to the downside, that's when we start to see a push to the upside. When this market is pushing to the upside, it doesn't mean that the market is creating a new high that will be higher than the previous high. It simply means that the market is trying to ease himself so that it can attract more sellers. So that's why we have the impulse and then the correction. Then we have another impulse. We then expect another correction. You understand, guys? Are you guys in line with what I'm saying? Now, there are two ways we can trade this using the swing structure and the substructure, right? So now, for example, let's say, let me take out this guy. Let me take out this guy real quick. Let me remove all of this so we start something fresh. Now, guys, this is how I try to identify my market trends. Firstly, I go on the monthly time frame. Right? First thing first, I go on the monthly time frame. It's very important for you to know this. You have to start from the monthly. That's where you start from. Or you start from the weekly. But it is always very good for you to start with the monthly. Now, if you look at the monthly, let's see the past 4 months. For the past 4 months, gold has been bullish, right? When you're looking at your market trends, you want to look at the past 4 months. What has been happening on the monthly for the past 4 months? Who has been in control? How many bullish candles can you see? How many bearish candles can you see? If you look at the purple candles, these are my bullish candles. These purple candles here. So we are having all the purples pushing to the upside on gold, right? We are getting this kind of move. And then we only have one gray candle which represents the bearish candle, which for me, I think it was a pullback for this month's continuation to the upside. And then if you look at it very well, you see that the market has consistently been pushing higher from here. When it found the breaker, that was in March. Since March, the market has been buying massively on gold, right? So for this reason, we've seen that this month we are having more bulls than the bears, which simply means that the last month bears we saw was just a pullback for the anticipation of this month's bullish trend. Now, if I pull up to the weekly, I want to know what price is doing on the weekly mainly. Now, the reason why I pull up on the weekly is because I want to know if price is around the discount or around the premium. Now let's say, for example, if the market is trending like this, right, and the market is around here, you don't want to be buying, right? You don't want to be buying because let's say the market is bullish, but now the market has just finished creating a new high. What the market is going to do after that is that the market is then going to start to create lower highs and what? And lower lows, and it will pull down, give you a deeper pullback before the market will trend to the upside. You understand? So just what I want to know or understand on the weekly time frame is, I want to know if market is around the premium, right, or market is around the discount, or market is at the equilibrium, meaning the 50%. The reason why I want to look at this on the weekly, it's simple, very simple. I should not be looking to buy if the market is around this level on the weekly time frame. You need to understand that that market has been buying for a long period of time. So it means that the buyers are already exhausted. That's why you start to see this little pushback on the weekly. And what that means is that the price might likely come back into this discounted level before the uptrend can continue. So with my years of experience, I've found out that price hardly continue its bullish or bearish trend from within the premium. Rather, it continues that bullish trend from within the discount. So now let's take for example on gold. If you look at gold here on the weekly, right? If you look at gold here on the weekly, you see what we have. You see that we had this low. This was the last low. I want to do it very well so that we can all see. This was the last low for gold, and then this was the highs. Now, if you can see very well, I guess everybody's in now. So for the market trend, if you can see very well, what you understand is this. We have a low followed by a high. So let's mark this out. We have a low, an impulse by purple, an impulse by purple, an impulse by purple, an impulse again. We then have this final impulse. Then we saw a bearish move. We saw a bearish move. Let's say, for example, if I had entered buy here, expecting price to continue to the upside, let's say this is where I find price. I don't know if you guys are following up. Let's say this is around where I find the market, and then I start looking out for buys. When this price continued all the way down here, I would have blown my account, or I would have lost. I would have lost the trade or blown my account. So the reason why I look on the weekly is because I want to know currently where the market is. Very, very important. You want to know where the market is. So for those of you that are just joining us, we are talking about market trends. We are talking about market trends, how to trade this market trends, right? How to trade this market trends. think more people are just joining us right now, but it's all right. I think I will just keep you guys on this side better. Let's keep you guys on this side. All right. So let me go back. Those of you that just joined, we were talking about market trends. So let me be real quick. Like I told you guys, we always don't have much time, just 40 minutes. So you guys should be joining class earlier. But we were talking about market trends, right? Because one important thing about Forex, or let's say trading as a whole, is your ability to understand the trend and trade in line with the trend. And now we have three different types of market trends, which some of you know, because I believe most of you are not newbies, right? You're just here because you want to advance, you want to like upgrade your trading style or your trading strategy. So we have the uptrends, consolidation, and downtrend. That's what we're talking about, right? So a trend is a tendency for price to move in a particular direction over a period, right? Over a period of time. It might be 1 day trend, it might be 2 days trend, it might be 1 week trend, it might be 1 month trend. The market can trend in any of this direction over a period of time. It doesn't matter, right? So trends can be long-term, short-term, upward, downward, and even sideways. Now, success with forex market trading or investment is tied to the investors, which is you, your own ability to identify trends and position yourself for profitable entry and exits. Now, the uptrends and downtrends are made up of two key components. We have the impulsive move, we have the correction phase. So we can view the impulses and corrections as swing structure and substructure, or you call it internal structure. So in an uptrend, like what you can see here, this example right here is an example of an uptrending market. So the first move to the upside is the impulse, that's the swing structure, and then the pullback is the correction, which is the substructure or the internal structure. And then the continuation again to the upside is also known as an impulse, which is also a correction, right? Or you call it a pullback. Some people might call it reversal, right? So now let's talk about how to use swing structures and substructures, right? Using swing structures and substructures. Swing structures and substructures can both be traded as their own independent trends. Traders can follow price down on the higher time frame basis using swing structures and trade the opposite way for shorter term trades within the opposing trends of the substructure. So what this simply means is this. This is how I identify market trends, right? This is how I do it. For example, now I go on the monthly time frame. Let me remove all of these guys. I want to remove everything, all the drawings. Make it fresh. Can't remove all the drawings. I don't know. Remove drawings. They are out. Very good. Now, for you guys, I said first place I go to identify the trend of the market is on the monthly time frame, right? First thing first, I want to look at the past 4 months. For the past 4 months, how has market been trending? This is August, this is September, October, November. So we are starting from this month. This is the month of starting in the month of and this is, we started in the month of September, and here we are in the month of December. So for the past 4 months, the market has been bullish. Can you guys hear me? For the past 4 months, the market has been bullish. This is where the foundation of my analysis starts. Now, what I can see, guys, I can see that we had an impulse here, followed by a pullback. We had another impulse, followed by a pullback, another impulse, followed by a deeper pullback, and now we are what? We are impulsing. We are going to impulse until we break above that high. That's what's going to happen, because that's what has been happening for over the past 4 months. You're looking at the monthly first. So in this case, you mark out this high. We are expecting this high to be broken. And then again, you mark out this low. We are not expecting this low to be broken. Reason is because we started from this month, and this month, no, that low was not broken. But if you look at this high was broken. If you look at this high as well was broken. So the only high left now to be broken is going to be this one, which means throughout this month, we'll be looking for buys on gold until this high breaks. Now, the monthly has given us a trend direction. Monthly has given us a trend direction, so we should know what we are doing, right? Now that we've seen what might likely happen in the future, our focus and concentration is now going to be within this range. So within this range, we are going to step down to the weekly. The weekly is for us to identify where the market is currently currently. You understand? Where the market is at currently. So now, if I have an impulse and the market is around here, I will not buy, because the market still needs to trade deeper into this level before the buys will do what? Continue. So now, if the market is already at this high and is doing a pullback, I'll wait for the market to come straight into these lower levels before I'll involve myself in anything buys. That means if I'm trading the pro trend. Now, if I'm trading the counter trend, which is the substructure, then once I get an impulsive move to the upside and I start to see price doing a pullback, once it gives me a low and a higher low, right? It gives me a high, a lower high, and then a lower low followed by a new lower low. We have a high, a low, a lower high, and then a lower low. Once I see that, I will now be looking to do what? To trade counter trend. So what I will do is, I have already know that price is coming straight into this discounted level before it can do what? Before it can start buying. So what I will do is, I will now look for an opportunity to take shots from this level until the market gets within this level here, before I look for opportunity to do what? To go longs. So I'm always trading in line with the market structure, with the market trend, rather than against the market trend. Now, I will not advise you guys to trade against the market trend. So now let's look at it for example. Now, this is the swing structure to the downside, right? Now, you wait for when price is doing a pullback, because this is a downtrend example. You understand? Swing and sub trade example. This is the downtrend example. The market is giving us an impulse, a pullback, and then an impulse. With this clear example here, you see that once the pullback starts, you see that price pushes to the upside, high above the recent high, and it pulls back and fails to break the most recent low, then impulses to the upside and breaks the recent high. That simply means that the market is going to do a pullback until it comes to create a new lower high. So your own now is to look for an entry to ride the trade until it gets to this premium level. Once it gets to this premium level, that's when you can start to anticipate a continuation of the market trend. So swing structure is bearish. So we can use market inefficiency concept and supply and demand to sell when price reaches a POI. You understand? Why for the substructure is also what? Is bullish within the swing downtrend. We can target selling POI for our counter buys. So what we are currently doing here is that we are entering a counter buy in a bearish trend. You understand? So now it all depends on how you're able to identify the market trend. The 2-time frame I try to identify the market trend on is the monthly number 1, the weekly number 2, right? And the daily time frame number 3. But the two most important time frame is the monthly and the weekly. I want to know the exact people who have been in control of the market over the month and over the week, so that I will always be in line with them. So now for all these classes that we've been having, right, they are all recorded and all the videos will be sent into the group once I'm done editing them, so that you guys can go back and watch the videos. You understand? So there's nothing to worry about, because all the videos are recorded and it will be posted once they are all edited and they are set and ready, right? So if you have any question, we have about 3 minutes left. A lot of people did not really join the call on time, which was very bad. You guys know we have 40 minutes for every class section, so you guys should always be ready to join on time. Our next class will be Saturday. And we will be talking about market structure. That's what we'll be talking about on Saturday. We'll talk about market structure, and then I'll also throw more light on the market trend, which is the swing structure and the substructure, while we focus more on market structure on Saturday. So if there's anybody that have a question, you can ask your question. All right, guys, you can go ahead and ask your question.
Yeah, Rich, can you hear me?
Yeah, I can hear you. Yeah.
Okay, on the daily, we really understood what you said on the P and BT. They are in charge of the directions. They determine the direction. But on the daily, what are we looking at for the daily time frame?
On the daily time frame, you are looking at for key levels, areas where price is approaching or areas where price is currently coming from. You understand? If now, yes, on the weekly, you've seen the direction that the market is heading towards. You have to look if the market is heading towards a demand or a daily demand or a daily supply. If there's a daily demand the market is heading towards to, it simply means that's the demand you'll be waiting out for. You understand? Now I will talk more on this on our supply and demand class. I'll talk more on it, so that we can talk more about the time frame to use supply and demand actively. You understand? So yes, I have different time frames for different things, you understand, to make it easier. So if I'm going on a monthly, all I know is I'm looking out for trend on the monthly and on the weekly. You understand? Then if I'm going to the daily time frame, I know that I am looking for a daily supply or demand wherever market is coming from. I look what I know this side to be trading it to. And if I'm looking on the 4 hour, I know that the 4 hour I'm looking out for um market structures, you understand, market inefficiencies. Those are what I look out for on the 4 hour until I step down to the 1 hour or 15 minutes for entries. But we are going to talk about everything, including how I use different time frame for different reasons and purposes. But the class is almost up. We are less than a minute. Thank you very much, guys. I'm still editing some of the videos. Oh,